Good afternoon. Thanks for joining us for Sprague's Market Brief. It's April 23rd, 2012. I'm Taylor Hudson, joined by Hugh McNaughton. We wanted to take this opportunity to do sort of a traditional market update and look at some charts and talk about what's been going on. And a little review of the last bit of winter that we had. Last time we came to you with sort of an overall market outlook was the tail end of February. Back when the market was screaming higher. This is the heating oil chart, and we were trading somewhere around 327. Wound up hitting a high of 332, just under 332 on February 24th. And since that time, the market sort of stalled out and is actually starting to move a little bit lower. So Hugh, I think what we'd like to do is just a little bit of an overview of some of the major factors. What's been going on?
Taylor, when we looked at this back in the towards the end of February, our main concern was main focus was were we looking at something equivalent to the 2011 fall off the cliff routine that did take place back then, or more something along the spring of 2008. Where obviously we kept on building towards that July $150 or close to a barrel bubble. I think our conclusion was that where we were similar to 2011 in many respects, there was one primary issue, and that was Iran. That was going to be the wild card that was particularly going to affect where we were going from there.
So what's been going on with Iran lately?
Well, since then, really what's happened is it's moved progressively towards I say progressively with a few fits and starts, towards the back burner. As the time went on and nothing happened, although we did go through that Strait of Hormuz crisis there for a while, where the Iranians were threatening at least to close the Strait of Hormuz. The fact is, it didn't happen. The tensions continue to work. Finally, here, when was it? In late March, mid-March, and then reinforced by an actual agreement in early April, the Iranians opened themselves to talks with the West.
So those were the meetings a couple of weeks ago, I think we heard about. What did they agree to at the meeting? What comes next?
Well, they didn't agree to anything specific in that first meeting, but it was encouraging to the extent that A, they actually had a meeting, and B, that they both sides came out of that meeting with an agreement to meet again in I think it's May 23rd, in the second half of next month.
Am I remembering correctly that the U.S. administration has until June or July to sort of make some decisions on these sanctions?
Yes, they do. The real next step is the EU's total ban on Iranian imports. That's supposed to take place in June. And that, I think, will probably be the key as to whether or not there is some real progress being made.
Okay. We got a picture of David Cameron and President Obama on the upper right-hand side. What's been going on there?
No, that's really representative of the talk about an SPR, a Strategic Petroleum Reserve release, which would involve obviously the U.S. crude oil stockpiles, but also the UK product stockpiles. All the European countries have their own product reserves that broke, and actually you and I, Taylor, we looked at the implications of that when it first came out in the interim, and I think we concluded that was going to be not necessarily a very effective move. However, it was enough to influence the market, obviously, and help bring us off the boil.
Gotcha. And meanwhile, as the U.S. has been talking about potential SPR releases, the other members of OPEC, what have they been talking about, specifically Saudi Arabia?
Saudi is the key. They're the ones sitting on the potential 2 or 2.5 million barrels of the world's current output of 86 million barrels. So their attitude would be crucial here. And what they have done is made very conciliatory remarks, statements about maintaining their current relatively high or very high level of output, particularly in the event of any disruptions for sanctions or because of the sanctions on Iran or for whatever reason. So that was regarded by the market as very soothing, I guess, encouraging type talk from the standpoint of lowered prices.
All right, and fourth, we've got a picture here of a Chinese automobile manufacturing line. What's been going on the economic front? I mean, the Dow's been going up. We've been right around 13,000, and so everything going well here.
Well, we're not doing too badly. I mean, compared to where we were this same time last year, which was really teetering on the edge, maybe of going into a double dip recession. There have been some encouraging recent reports that the U.S. is on track for a steady but slow maybe recovery. Europe, unfortunately, is now looking like it's more and more going to be subject to a recession that will last into the second half of next year, and that's the one big global downer. It may be a reflection already of some of that European influence, but the Chinese growth, where GDP was, I think, originally expected to go through the first quarter here and into the second quarter at around about 8.7%. I mean, very, very substantial growth. I mean, they have been growing, between 8 and 9.5% over the last couple of years. Has dropped to 8.3 or 8.4. It's still very substantial. I don't think China is on the verge of any kind of a real hard landing, but it was enough. It has been enough to take some of the bloom off the fundamentalist rose that whatever happens, demand is somehow going to soak up. Increasing demand is going to soak up crude oil supply.
So it sounds like in this debate about does this look like 2008 or 2011, probably looks a little bit more like 2011. It's just that the economic news, at least in the U.S., has been a little bit better than it was last year, and we still have this Iran issue out there, unresolved, although looking more positive, still unresolved.
Absolutely, Taylor.
Okay, well, what do you think over the next couple of months here, Hugh?
Well, I'd be interested in your point of view. As a matter of fact, well, you want to go first. No, I'm a little bit of an optimist from the standpoint of price relief, in that I think that the correction is in place, or potentially in place. We've obviously come off those peak levels from late February. We haven't seen the kind of dramatic free fall that we saw in 2011, but I'm not sure we really want to see those, considering that was accompanied, as I said, by a real concern that we were going to go back into a 2008, 2009 type recession. So my feeling is that we've got some further downside correction to go. What do you think?
I would happen to agree with you some. I think the Iran issue will get played in the media extensively, probably a little bit more here in June and July when the Obama administration approaches its own deadline. So I guess I'm looking for prices to probably stay roughly where they are and zigzag above that level and below that level for brief periods of time. But I don't think that the pricing structure will be dramatically different a couple of months from now. On that point, let's take a look at some charts to finish up. So here's the heating oil chart, and I put this one up because it's a good representation of not only most of our customers, what they're interested in, but also how the other charts look. And you can see up here from the high at just under 332 on February 24th, I drew a general downtrend line. These are very subjective. It was just meant to show that all of the rallies since that point have peaked out at lower numbers than the rally before. We broke through the 40-day moving average in late March, early April, and that was a signal that has been validated. The market continued to go down all the way until April 11th. We hit a 308 low here in the heating oil. Since that time, all of the moving averages now are acting like resistance when the market tries to go up. You can see that early last week we rallied. We went all the way to 315, and the 18-day moving average stopped that rally. We moved back down, and today even we started off lower, but when I took this screenshot, we were up 40 points. This means that essentially the market could come all the way back to 320, where you see the 40-day moving average up here. And it really wouldn't change a long-term bear's perspective that the market has come off its peak and it's beginning to make a move to lower levels. If it breaks the 320 mark, then again, I think this is what I'm talking about in terms of the market basically staying in a similar area, the 320s, until the Iran issue gets resolved. So in the interim, the moving averages will act as resistance above the market, and the 308 level will be the major support point for heating oil for a while. If we take a look at Brent crude, which, as we've discussed in prior ones, really drives the product markets here on the East Coast. Again, April saw the break of the 40-day moving average, also saw the break out of a $5 trading range between 121 and 126. Classical chart analysis would suggest that the market will achieve a point equal to the width of the original trading range, which is $5. So if we broke out at 121, $5 move would be 116. We've come close to that in Brent, but not quite there. So this is definitely looking like a bearish chart. If we go to gasoline, this had the sharpest fall off in April. A 4-day stretch taking us from 335 all the way down to 315. Today, the market has had one heck of a range, 310.52 low, 318.45 last print when I took this. 8-cent range in one day. And to the upside, so this looks like a minor reversal. But again, the same concept on this chart. Gasoline will use those moving averages above it for resistance points, and it'll use prior lows as support. So this one, frankly, looks like it might try to run at a 1 or 2 day move back up to those moving averages and see if the bulls can get it done. So, the charts seem to suggest that, like you said, Hugh, the top is in, and they want to work a little bit lower. Although from time to time they'll make some corrective rallies and try to get above those moving averages. So I think that's it for us, and we hope you enjoyed this outlook. And again, feedback's always welcome, and we hope you all have a great day.